Hi, this is Sai Morton with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the forexbsummit.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit forexbsummit.com forum and read my analysis for the week before watching this daily video. Greetings everybody, welcome to the technical analysis of the Forex market from the forexbsummit.com. The new week is starting now, and the situation on the euro currency becomes even more interesting than the past week. So we will start from the daily time frame, and on Friday we said that since market wasn't be able to trigger this bearish engulfing pattern during almost the whole week. You can see that market almost the whole week stands inside the range of this engulfing pattern. Okay, although it has tried to pierce this low of that pattern around 137.14, this was unsuccessful, and market returns right back with long shadows of these candles. Shows us that almost during the whole week market stands indecision. And we said that since the market hasn't shown any significant down move that was predicted by this possible engulfing pattern, then probably it will show some move to the upside. And on Friday we see that this is starting to become true. So market shows some upside move. But on the coming week, in the beginning of the week especially, the major our question is to estimate the crucial points to watch for that could tell us that probably market will continue to move to the upside, or where are the risks that market will turn down and still will show the significant retracement to the downside, probably at least to that area of conference support 135.75, 136.14. I might say that the odds that market still could show some move to the downside still exist. So that's not obvious that market will just explode and will continue to move to the upside. Speaking about the potential upward targets, it's really obvious. We have discussed it also in the previous week. It's that area is around 140, 141 areas. This is the monthly pivot point, monthly pivot resistance one stands right here. Daily overbought 140.83 for the Monday is right here. Also 618 target from that ABC pattern, ABC bottom. 618 target stands right here. Also you can see that previous lows on the weekly and daily time frames is also right here. So this will be the really significant area of resistance, and I think that this is the nearest upward target. But what about the crucial points that we have just discussed? Well, first of all, the major thing that we should be aware of is the potential wash and rinse of that high. So if market will show some acceleration to the upside, clear out these highs, and then returns right back below that area 139.05, this could lead to the significant move to the downside. This will be just the stop leaking above this area and continuation to the upside. The major assistance is the weekly pivot point. It's right here. It's 138.03. If market will show the wash and rinse, precisely speaking, the wash and rinse is the first assistant, and the weekly pivot point is the second one. So if market will show wash and rinse, it's first take out of that high and returns right back, and then if it will continue and move below this weekly pivot point, this will lead us to the further move to the downside. And if this will happen, this could turn to the daily double repulse sale pattern. Take a look at another daily pattern. This is just a large picture of that swing to the upside. What do we say? 1, 2, 3, 4, 5, 6, 7, 8 bars to the upside. Minimum required number of bars. Okay, it's good separation from this grid line. Green line is the 3 period simple moving average shifted forward for the 3 periods. We have now first close below the 3x3, close above it, and if market will show wash and rinse, creating the new highs compared to that one, then returns right back and will close below this green line again, this will be the trigger bar for the entering short according with this Jordan-Napoli directional signal. The minimum target of that move, I suppose, will be the reaching of that confluence support area. Well, also you can see that market hasn't reached any significant FIB support area during this retracement. So that is the 3-8 support from the hidden reaction point from that thrusting bar, not from the major major reaction, not from that low. Okay, so that market hasn't quite reached this significant area of support, and this will be the nice context for the potential double repo if will happen those things that we have just discussed. If market either will show new highs, or even if it will not show the new highs but close below the weekly pivot point and close below the 3x3, this will be the first signal that potentially market could continue move to the downward further. Okay, now let's take a look on the 4-hour time frame. On the 4-hour time, we see that our butterfly that we discussed on Friday is underway, and we said that head and shoulders pattern, especially on the intraday charts, have the high probability of failure. And very often head and shoulders pattern, the failure head and shoulders pattern shifts to butterflies. That was our second scenario that we discussed on the previous week. Now this pattern is underway. We see that hourly trend is bullish. 4-hour trend is bullish. Daily trend is also bullish. What we see? The target of this butterfly is 127, is first one, at 139.75. Also 139.61 is the weekly pivot resistance one. 140 is the 1618 extension from that pattern. A, B, C bottom. 140 is right here. So the wash and rinse on the daily time frame could come if market will accomplish just 127 extension of the butterfly target. So this is the high of the daily pattern. Okay, market could reach that area, then returns right back and close below this high. In this case, probably this will be the first signal that market could continue move to the 136 area. It's right here. The second clue will be if market will close below the weekly pivot point. Well, the major bullish scenario suggests that market will proceed right to the 1618 target of the butterfly. It's 140.66. That is also the target on the daily time frame. So you can see that this 140.66 stands right here, right in agreement with the monthly pivot resistance inside this area of resistance, daily report, and so on. So that is major bullish scenario. How you could act depending on what is your view on the market. So if you are bearish, you could wait for a couple of things. First of all, you could try to sell this butterfly right from the 127 extension, but this is a bit risky a trade, since the trend will stand against you, and you should be very extra careful, since if market will show some respect of that area to the downside, you should immediately place your stop to the break-even, since this is the very high risk to short market right from that area, since all the price action during the previous week suggests that market should accelerate to the upside. This is the feather head and shoulders. This is the price environment on the daily time frame that couldn't trigger the bearish engulfing pattern. So market suggests that it will accelerate to the upside. This is the first scenario. Second scenario, you could wait when the wash and rinse will be completed. Market will close below this high and will move below the pivot point. In that case, you probably could try enter short also. This will be a bit more safer entry. The most safe entry for the bears is right from that area, since even if market will intend to continue move to the upside, I suggest that market should respect that area with the high probability, since this is really strong area of resistance and market probably will show some pullback from that area. And from the risk point of view, the short market right from that area is more safe. If you are bullish, you have different scenarios also, but for that we need the hourly time frame. On the hourly time frame, we see the most recent swing to the upside. Now this swing. Okay, what do we have? The hourly trend is also bullish based on the MACD predictor indicator, and since all three trends are bullish, I mean hourly trend, 4-hour trend, and daily trend, you should use the nearest area of support to enter on the long side of the market. You can see by the MACD predictor that a trend will remain bullish until that area of confidence support 138.65, 46, 138.51 is right here. Also, you can see that this is the previous highs. This is the break-even point of the butterfly. It's right here. Okay, at this point. So if market really intends to continue move to the upside, then probably it should hold on that level. You could place stop somewhere below the next confluence support 138.20 area. It's right here. Or it's a bit safer to place stop below this 3-8 support from the whole swing to the upside and below the weekly pivot point. This will be quite logical. Besides, if market will break that areas, then the hourly trend will shift bearish, and it will suggest that market intends to continue a deeper move to the downside. Well, your potential target at minimum, the 127 extension of the butterfly, 139.60, 139.75 area. It's right here. Also, you could later place your stop to the break even or somewhere above your entry point and wait even to the 140, 140.50 area. It also will be normal. So, from the current perspective, I suppose that it's relatively safe to hold longs till the 139.60, 139.70 area. Well, and it's better to wait to enter short if you're bearish from the 140, 140.50 area rather than trying to short the intermediate target of the butterfly around 127. Although it could lead you to a significant risk-reward ratio if the market will really show wash and rinse and really show a retracement to the 136 area, then your entry from the 127 extension will be just perfect. But the odds suggest that probably market still continue move to the 140, 140.50 area. So you can see market now gives us a lot of different possibilities to trade it depending on your time frame, preferably your time frame, depending on your tools that you used in trading. So just watch your personal signal, watch your personal context for entering the market, and be careful, keep in mind the areas and the moments that we have just discussed.